get this turned egg.
Whole lot of blessed over, yeah, you know that a whole lot of who want desire, cause you know that I do got it. Whole lot of D on me, I walk in, I'm a showstop. Whole lot of handguns, a new shop. Whole lot of pop ups, a new shop. Whole lot of envy and impact.
Market Maker with Index Queen, episode 3, and we're back. We're gonna get straight into it because y'all already know I was acting it full at the beginning. All right, we really about to just jump into it. So we're gonna start off talking about market maker moves, 4 basic setups. You have your stop hunt high, M formation, stop hunt low, W formation, a straightaway rise, a straightaway drop. These are 4 basic setups. You can literally take any 4 of these trades when it presents itself in the market and smack. I have examples, as you see. Y'all, my cursor's still not working. Still trying to figure that out. We're gonna get that together. But the top image that you see is an information. It's very simple. You're gonna get in on the second leg of the W's and the M's. That's why you see the circle. That's the first circle. That's an index queen entry because that is sniper entry. But if you want to wait for extra confirmation, or you more of a breakout trader, then you will get in the second circle. Y'all, if y'all hear any noise, that's my dog Skylar. Yeah, that's her. She's in her house right now, so she's not happy. All right. Anyway, so you have the simple M, then you have an extended M, which means that it's not going to always retest exactly the same price where you get that double top. Sometimes it's raised a little higher. That's where we get the spikes and the stop hunts. So that's why you see that second M. And then you got the last one at the bottom. It's showing you more of a short form because it doesn't always have to be even. But that is also an entry. You can take the breakouts of the peak at the bottom. Okay. You also have your W formations, as you see. Same thing. Double bottom. You ride the second leg up. Price hits twice. Price hits twice, baby. Y'all see even that is most likely a W. So that's confirmation. You will get in that trade. You will put your stop loss below where it retested twice. You will put your stop loss behind that support that has been built there. If you need to look over to the left so you can see the other support, because most likely there's other support previous days that was retested, you want to put that stop loss behind that, okay? We talked about spike bars. We already know about that from the previous episodes. You have a spike bar, upper shadow, okay? Some people call these dojis or hammers, things like that. They're spike bars. You have an upper shadow, you have a lower shadow. Of course, the upper shadow is a bearish spike, meaning that price is trying to push up, but there is no momentum in that candle, so that's why it's wicking. Same thing with the bullish, okay? So that is the cycle. That's, you don't need any dots. What is all that other stuff? MACDs. I mean, this is just simple price action, really. That's how basic these 4 moves are. So simple, basic. Once you start seeing this, you're gonna kill it because it's just that simple. Okay, we're gonna look at some charts. These are template charts that I want to show you guys. These are some setups that you may see in your favorite pairs. So just pay attention to these. We have consolidation that formed to the left. You see it's consolidated. We got a spike to the low, right? You see the hammer move at the bottom. There's a spike, It started consolidating. We got another spike at the same price, just like we talked about when we talked about W formations. 2 hits to the bottom. That is a W formation. Again, you will put your stop loss behind the price because you see the blue shadow boxes. You get in at the low. If you're me, if you liked your sniper entries, you get in at the low and you ride that. If you're more of a breakout, then you will have this breakout right here at the shadow box. You will get in there if you need extra confirmation, which is fine, and you will ride. As you see, you're in the buy. Okay, so the low was hit actually 3 times because consolidation to the left, price was wick there as well. So you technically have 3 spikes to the low. Okay, you start to recognize these setups. Really, this is really all you need. It's only so much the market maker can do. It can be hit your stops up and down, change directions. He can catch the retail traders going the wrong way. Once you understand these setups, it's definitely a game changer, period. Let's go to the next chart. Here we have where out the shadow box we had got a sell, price wicked, major spike, major hammer to the price. You got in right here, rode it, consolidated, price wicked out again. We have a second W formation. Price was wicked out twice again. Big W. Actually, if you really want to look at it, it's a big W. Okay, you would get in at the second spike, and beautiful pips going up. You see price was wicked twice. Again, you will put your stop loss where you see this slanted white line. Extra confirmation, breakout traders, that will be your entry right there. That candle is your confirmation. First is price action. As you see, price was wicked twice. You have the bearish candle that was formed. You will get in right there at the slant. So this is just different variations of different W's. Sometimes you have multi-session W's, have small W's. You also, some people may look at this, because I would have looked at this also trade to the left as an inverted head and shoulders. So, but overall, this will be a big W. Price was wicked twice. Sometimes you have deeper stop hunts, as you see, the major wick right there, deeper stop hunts. But in all, it's M's and W's. You can literally trade those setups in the market. Okay, we're gonna go to our next chart, which is like one of my favorite setups. I don't know, but I love head and shoulders. So here we have 3 spikes to the high. We have a head and shoulders that formed. You see the top shadow box here. Again, once the peak formation at the top, we have a doji. If you look in between this bearish candle, I'm at the top shadow box. Let me see if I can. Oh, your girl can draw something. Let's see. Let's use the pen. Hold up. How? It went away. Oh, there we go. Pen. Okay. So right here. Ooh, that didn't work. Y'all, that pen did not work. Okay, so we're gonna go ahead and leave that alone. But we have the shadow box, okay, at the top, at the head of the head and shoulders. Where you see the slant at, that will be confirmation entry for you. You can get in right there to catch the move. But this is a head and shoulders, basically 3 spikes to the high. It broke down. The pattern was completed. Your exit is at the W formation. It has completed. So you would really take your trades out. Me personally, I always leave a small runner, but I take over 50%. But where this W formation, as you see, it's a W. That's your exit off the head and shoulders. That's where you would get out of your sell trade, at the red shadow box. Okay, there's, like I said, there's 3 hits to the high Head and shoulders, you got a reversal to the low, W formation, then back up to retest. Simple. That's one trade. You got one trade here. You can catch the buy at the low too for the W formation. That will be your second trade. You're done for the day. Easy. Easy setup. Easy setup. I love trading head and shoulders. Right here, we have another setup. At the blue box, you have a consolidation zone that was presented right here. It was ranging. You have a stop hunt to the low. 3 hits to the low right here in this shadow box. You got 3 hits to the low. I would get an entry right there. Ride the buy up. Easy. This pattern is considered a head and shoulders, or it could be a cup and handle, but the handle, there's no red candle to the right. So typically that wouldn't be a handle because the handle is always a sell down for a retest. But this will be considered, you know, a head and shoulders. But all in all, it's 3 spikes to the low. That's your confirmation. You will get in at the slant. That's where entry will be for you guys for confirmation. No pain. As you see, there was no drawdown. Like I said, that's why I was like, I really can't call this a cup and handle because it did not present a handle. It was straight buys. Like, you were up for a good 30, 45 minutes in this trade and you could be done for the day. I mean, these are easy setups that I know you guys have seen in the market. Here we have a big fat W. Look at this, guys. Oh my gosh. We had a sell out of consolidation. It sold down. Again, price was wicked. Where you see the red trend line. Price was wicked twice. And if you look at it, if you draw a line, this is a big multi-session W. Look at the second retest of price. Straight buy mode. No drawdown. No drawdown. No drawdown. It start consolidating at the high. That's where you would exit your trade. Right here. You see this spike, this hammer right here, this spike to the high, you will get out. Because that's confirmation that price is really not trying to push up anymore. That's confirmation right there. I keep telling y'all the same thing. What did I say? It's money in the candles. You need to really start paying attention to these candles. Like straight up, you can sit here and trade straight off of candles. That's what I do. Like, I'm reading candles, period. I mean, I'm doing price action and market structure, but I know when to get in and I know when to get out. And this is where I'm going to get out. Ranging and hammer. That's where you would exit. You could take the sell there if you want to. Depending on where price is, you could ride the sell. Because most likely where the red shadow box is, that's a retest. And it probably bought back up. So you actually could have left your runner. Because that's what I would have did. I would have left a runner at the high. Took the sell. Probably took partially of that, but if I felt like it was going to continue to buy up, I probably would have pulled out the wholesale. Easy setup right here. It's y'all, it's really just that simple. I'm really telling you, it's really just that simple. Seriously. All right, so we have another chart. Okay, this one is very interesting. Because out the blue shadow box, we have consolidation. We had 3 levels of sell. Okay, so here we go. Consolidation out the blue blocks to the left. That's where I'm at, guys. Consolidation, blue blocks. Drop down, 1 level. Consolidation out the blue blocks, 2. Okay, straight drop, 3. That is 3 levels of sell. You guys really need to know where you're at in the market. A lot of times, y'all don't understand. Like, for instance, I can't remember what day this is, but US 30 major buy, but it was on a smaller time frame where you seen a level. It literally on a smaller time frame was consolidating, bought up, consolidating, bought up, consolidating, bought up, consolidating. 3 levels of buy. 3 levels. You really need to understand where you're at in the market. Once you understand the levels that you're at, I'm telling you, you're gonna kill it every time. Every time you're gonna kill it. Okay. So like I said, we had 3 levels of sell. It failed to take out the low. Okay, so that was your first. Where you see that yellow circle, that was a retest to the low, right? We start consolidating. Things are starting to look like a W formation. Here we go. Another spike to price. As y'all see the other blue shadow box. Price is failing to break the low. Again, we have a spike to the same price. So that's two spikes to the low. Straight buy candles. Again. Confirmation, you will get in right here where the white trend line is. You will get in for the buy and you will eat that. Again, you will exit, hammer. Exit at the hammer. You can take the sell there if you feel confident, or you can be done with your day, really, because look at all these pips. You can smack right here and be done with your day and go about your business. Because I really don't understand why y'all be in the market all day. Like in Discord, y'all be like 12, 1, 2 o'clock. And like already 3 setups have been made depending on what you're trading, especially for indices. Like it done been like 3 setups. Well, let me not say 3. Maybe 2. 2 setups that's already been given. The market has already given us. Why are you still in the market? Go enjoy your life. Okay? Y'all need to go enjoy your life. Okay? So we see that price refused to break the low, so we got a W formation. Beautiful. This is literally 3 trades. If you were trading at night, you could have caught the sell. Price refused to take out the low. Could have got the W formation. Could have sold again. That is actually 3 setups. But really, all you need is 2. I always say like 2 to 3. But 2 solid setups, 50 to 100 pips. What more can you ask for from the market? Like, what more can you ask? It's just so simple, guys. So simple. All right, so we're going to talk about the trading zone, okay? Be able to identify key points on the chart where you can safely enter the trade. We literally just watched some setups, right? We looked at setups. Go back if you were taking notes. Go back, pause for the cons, write what I said. These are key setups that you can take, basic setups that you can take. You need to be able to identify key points, key price that you can get in. That's when you know how to safely get it in a trade, because you have your confirmations, right? Okay, M's and W's. Literally, that's all you can sit there and trade. Really. Like if you want to cut all the like BS, all the confusion, like playing in market structure, you can really just look for second leg M's and second leg W's. Ride the leg and you can be done for your day. That's it. Remember, high percentage setups. That's all you need. High percentage setups. Which is my next point. High percentage setups that will allow you to be most profitable. I didn't say profitable. I said most profitable. That's what you want to do. That's what you want to take. Other than that, sit your ass on your hands and wait. Period. So, Asian range. We talked about that last episode. 50 pips or less. That's what you can expect depending on what you're trading. Okay? We already know indices can give you way more than that. It's going so for Asian session, for Asian session, you can sit there and trade the range. Literally, it is in the range. It stays within the range. That's why I don't mind trading Asian session if I'm up or if I'm not doing anything else, because literally it barely breaks out of the range, but it literally like goes from sell zone to buy zone, back to buy zone to sell zone, sell zone to middle of structure. Literally, it's so funny. But yeah, any other Forex pairs, you can typically catch about 50 pips and you good. Setups can occur in the last 1/4 outside of the box zone. Excuse that typo. So this is more for breakout traders. When I was showing you the white trend line on the previous charts, where that trend line was, that's outside the box. So you get 1/4 outside the box. You can literally take that trade for extra confirmation. If you do not feel comfortable getting at the low, it is okay. Everyone can't trade like that. But I am showing you the way that I trade. And if you know anything about how I trade, because you know me from Discord, I will put the link in the description. You know I get sniper entries. So that's how I get sniper entries, okay? But again, for extra confirmation, the arrow is at on this particular chart. Outside the box zone, you can get in a buy and catch it. And when you do that, really, it's going to immediately go blue. You're going to be immediately in profit, okay? Remember, you are smarter than the box. If you're not comfortable with that and it's not enough confirmation, remember, 1/4 outside the box zone is a safe entry. It's a very safe entry. Okay. So we're going to talk about rules to profit, okay? Stop trading every day. Everybody wants to be a full-time trader, right? I get it. I'm a full-time trader, right? But even I need days off. You need to take days off. You can literally trade 3 days out the week and still be profitable and still pay bills and still do things that you need to do. You do not have to trade every day. Do not have people thinking that you need to do that every day, because it doesn't have to be done like that. Because trading every day can feed the broker's pockets, not your pockets. Okay? Remember that. Trading every day, because every day you're not going to win, right? I done had plenty of winning streaks, like straight up. I done had a month of winning streaks and had a shit show happen once. You know, you need those days. So you need to pay attention. If you've been up like a lot consistently, go ahead, take a break. Say, you know what, I'm not going to trade today. I'll come back tomorrow and catch a setup. And then I would even recommend maybe not going so hard with your lot size. Maybe using half of what you usually trade with. Just get into the mindset that you don't need to trade every day. Show up every day. No setup, no trade. If there's no setup, don't trade. Don't be desperate. Don't be that person. Don't be that person. If you don't see a setup, be like, oh, I don't see a setup. Today is not the day. Hey, I'll come back tomorrow. Or I'll check back tonight at London. Or anything like that. Remember, no setup, no trade. So start thinking like a market maker. Number 3, learn to become highly selective on trades. High percentage trades. You want to be selective with these trades. Don't just get into anything. Oh, I just feel like trading EJ today. Let me just jump in some shit. Nah. Be selective. Like y'all want to be picky about other stuff? Well, some of y'all just don't have, you know. Yeah, I said it. Be selective, okay? Be selective. All right. Set your hours. So that's what I'm saying. Trade the end of Asian and London Open and take a 4-hour break. You're good. Have your selective trades. Pick hours that you're going to trade at according to your lifestyle. Okay? This is supposed to be something additional. This is not supposed to take over your life. So trade according what works for your schedule. If you're still going to work, fit it around your schedule. Okay? Other rules to profit. Learn how to take 50 pips and dip. Chunk the deuce to the market. Because really all you need is 50 solid pips, to be honest. That's really like all you need. All right? So learn how to do that. Learn how to capture that. Greed kills all good traders. I don't have to explain it. The object is time, freedom, and leverage. Please remember that. like I go back, like setting a schedule. This is the object is to free up your time, freedom, and leverage. So don't make this a big hassle. Don't stress yourself out. Don't forget why you started trading in the first place, boo boo. Don't forget that. Okay. Take only clear setups. I keep saying it. High percentage setups, clear setups. So we're gonna end things right there with episode 3. I hope that you guys found this very to be rewarding to your ears. Don't forget to like, comment, and subscribe to my channel. If you have any questions about any of the setups that was given on the templates, hit me up below. I will be sure to answer those questions. Until then, I will see you at the next one, babies. Bye, love.